Ladies and gentlemen, Bitcoin just went for an absolutely massive fake out. As you can see right here, the price went from almost $73,000 yesterday to as low as $67,500 just a few minutes ago. And the funniest part is, I warned you guys about this yesterday because we had the United States inflation rate numbers coming out. And if you're wondering, the numbers came out, I would say, even a little bit crazier than expected. If you've not done it yet, make sure you press that like button, but also keep on watching. So for all of you that I kept in the loop, which hopefully is everybody, we already stated that the expected value of the inflation rate was going to be going up, but the anticipation was that it was going to be going up from 3.2 to roughly 3.4%. And it turns out it didn't go up from 3.2 to 3.4, it went up from 3.2 to 3.5. And this to many people might sound like a real big nothing burger, but inflation at the end of the day is a really interesting concept. And generally speaking, you know, in a healthy economy, you want to aim for roughly 2% inflation, but as the inflation rate goes up, theoretically speaking, there's an argument to be made that that means that things are actually going really well. Because as people earn more, they spend more, which makes people because they can. To some extent, it could also be because of scarcity crises or because there's less job opportunities, meaning the cost per employee is going to go up, meaning the companies also have to put their goods up a little bit more, which means you have to pay more for it, or for example, scarcity somewhere in a certain market, which causes everything to kind of go for a little spin around basically. But the negative side to it is if you want to combat inflation, you have to increase or at least there's an option, which is to increase the interest rate. How does that work? Well, it kind of balances things out. Where I just stated, there's a little circle for why the inflation rate might increase and why things could get more expensive. There's also a counter to that, which is if people do not want to spend money now, let's say you want to build a big project, you want to build a really big new factory. Well, if you understand that instead of just paying 2%, you now have to pay 5% per year to borrow the money, the cost of capital is higher, so you're less likely to do that. And generally speaking, it should be the counter because it basically, as the dollar might become worth less, this should become worth more as a store of value, just similar to how gold is so. But it's kind of funny that today it kind of reacted in the way we did not expect. Well, we did expect it based on what I explained yesterday, but I mean, in terms of the direct correlation with the inflation numbers, maybe. But as I stated in yesterday's video, the triangle here is still not invalidated. Yes, we saw a slight little breakout towards the upside, but we did not get our confirming candle, which we would have liked to see. And so it's right back into a new breakout waiting to happen, which, like I stated earlier, and many people were criticizing me for this, could still be towards the downside, or, which is the most likely scenario, we actually kind of keep trading sideways until a few more days as we get closer to the halving, which is going to occur on the 19th of April. And the reason I keep saying that is because we are really quite undecided as to whether or not the halving is priced in, and whether or not the halving, you know, Bitcoin's inflation shock, supply shock, is going to heavily increase the prices or let some institutions sell as they were buying with the anticipation of this supply shock and are right now basically buying the rumor, selling the news. Ultimately though, the pattern has not yet been broken. Matter of fact, you might even argue that we are still just in a really, really beautiful uptrend until some of these lower bottoms, like this one right here of April 3rd at roughly $65,300 are broken. Because again, you can see the trend that we are witnessing in here, right? It's basically still just a really beautiful uptrend with an outlier here for sure, but I can definitely spot the trend. Now, I can't necessarily say that that's a bullish indicator. What we did note upon a little bit earlier is how Bitcoin has a very, very high probability to fill the previous CME gap, which is basically stopped at about 68,000, which it now has filled. Again, on every time frame might look slightly different, but basically this area right here, which if we extrapolate, we can see the Bitcoin price has now gotten to. However, there is one more that I'm just personally watching, and that's over on the daily time frame. We can see, I think over on the 12-hour, that previously there was also a CME gap roughly at the $66,000 mark. And I'm just saying, if we kind of extrapolate and look at the bigger triangle, it is not that crazy if we were to retest somewhere around the 66.4K mark before moving further upwards. But the most important supports have been hit. It's actually quite funny, like I described yesterday, just how much liquidations are ramping up now. And it really seems to be more and more likely that they were just really hunting for those liquidations at roughly the $72,000 mark. I mean, even as of this point, there still remains a lot of liquidity, a lot of pressure at the $73,000 mark. And still, if we're looking for the path of least resistance, it seems very likely that it could either flow between about 65K and I'm gonna say 72K freely, but with significant upward bias as price seeks liquidity. It's significantly more skewed towards the upside. Anyway, ladies and gentlemen, I'm not really getting stopped out here. I'm not really getting uncertain or anything along those lines. I still have got my very massive bullish bias, and nothing's really stopping that. I personally think here it's a little bit of a shock, just like how they shocked people out at 72K just now. They're basically doing that similar thing for the bottom side or the downside here, just getting into the halving. But ultimately, we know what's about to happen. Ultimately, you guys know exactly where I'm placing my longs at. I still think the most logical side is just up. If you're looking for the exact targets, just check back the previous video, because everything that I said in there is still valid. Just wanted to say that our theory of going down or outlying inflation numbers kind of came through, interestingly enough. It shocked a lot of people, but ultimately, I do not think it's that bad. People are way overdoing it, which is a very good sign to remain positive. Okay, that's just my thought.